Welcome back to Homebuyer University. Today we are going to talk about a question that comes up often, but usually people are afraid to ask because they think it might make them feel dumb. But there are no such thing as any dumb or stupid questions, so the question we're diving into today is, what is a refinance?
There are two types of refinances, a rate and term refinance and a cash out refinance. Dom, let's break down a rate and term refinance first.
A rate and term refinance is probably the most common types of refinances, and it's really just a money-saving mechanism. Say you bought your house and interest rates have gone down, or maybe the value of your property has gone up, or both have happened, and you now have an opportunity to save a little monthly amount on your mortgage payment. This is where a rate and term refinance comes in. When you start off with a home, you have a loan in place that has set terms and a set rate. Say those rates drop, it's time to start thinking about that rate and term refinance. Effectively, what happens is you get a new loan at a lower rate and payment that takes the place of that original loan you had. So now you have a new loan with a new rate, a new payment, and a new 30-year term. It's always good to take a look at what your rate is and what rates are in the market right now to see if you might be eligible to save a little bit of money. There are usually costs to rate and term refinances, so you don't want to do it every month. You want to make the most out of doing it, but it's always good to keep tabs on your mortgage and rate and where current market rates are to see if there might be a potential for a rate and term refinance to reduce your monthly payment. Andrew, tell us about the other refinance, the cash out refinance.
A cash out refinance is a refinance loan that allows you to cash out part of your equity in your home. Let's say you've got some equity in your home that you'd love to tap into for home remodels, paying off debt, or maybe just building an emergency fund if you feel safer sitting on that cash. A cash out refinance loan pays off your old mortgage, but puts a new, larger mortgage in place, and the difference, your equity, is actually what you get to keep. Now, although it may not be a lower rate or payment, it still allows you to access that cash so you can still work on some other financial goals that you might have.
Just a quick recap, the two major types of refinances. That rate and term refinance ultimately is there to help you reduce your payment and save you some money on a monthly basis. The cash out refinance is there to help you tap into equity that you already have in the home or that you've built up to access for other endeavors. Both are great tools, and either one might be the right fit for you depending on where you're at and what your priorities are.